going into the long weekend. Yields this morning just a touch lower at the front end of the curve. Want to turn to crude and finish on energy for you just briefly. WTI and Brent, little move this morning, but plenty of action over at OPEC Plus, initiating another boost to supply.
Another boost to supply, and it looks like potentially the market can absorb it. That's what Saxo Bank is saying. In the short term, downside risks to crude appear contained, because not only are they adding more, when you saw the prices that the Saudis are sending to Asia, they've boosted those prices. So clearly the market is able to absorb what they're putting in right now. But that's because we're at summer peak travel demand. And they may be trying to get ahead of what people are saying 2026 is going to look like. Not a time when you want to try to increase that market share.
This is a well-supplied market right now, that's for sure, in the minds of many. Crude down by 1/10%. WTI 66.93. With 2 hours until the opening bell, let's get you some morning moves and cross back over to Yahara for more. Hey, Yahara.
Hi, John. We start with Tesla down 6.4% in the pre-market after Elon Musk launched his new political party. And the way Dan Ives put it to you and Anne-Marie earlier is that this move lower is on the prospect that this could sharpen the divide between Musk and Trump, and it could lead to Trump blocking Musk's autonomous driving ambitions. And of course, this idea that Musk is too distracted with politics at a time when Tesla needs his leadership. Moving on to another automaker, we have Stellantis now down 4.2% on a downgrade by Bank of America to neutral. That's because they are expecting to see a very weak first half report later this month. They say that even though Stellantis is making progress here in the U.S., it is struggling over in Europe, especially on EVs, according to B of A. And we end with Boeing. This is it's actually up about 0.1%, but it's among a few stocks that we are seeing move as President Trump's July 9th tariff deadline looms. Investors are worried that new trade barriers could drive up costs for the plane maker, which of course relies on a global supply chain, but also that China's retaliatory tariffs could make its planes more expensive than its rivals like Airbus. And I will note that China is a key and growing market for Boeing. John?
Yahara, thank you. Appreciate it. More from Yahara in just a moment, and more on Boeing as well. In about 40 minutes' time, we'll catch up with Sheila Kahyaoglu of Jefferies. On our radar this morning, one of our top stories, President Donald Trump threatening to impose an additional 10% tariff on any country aligning with the anti-American policies of BRICS. The threat comes as the president prepares to send tariff letters starting at noon.
So what's so interesting about this, of course, is everyone thought India was going to get a deal almost immediately alongside Japan, but India is also a part of BRICS. So are they now in the crossfires of the president with any country that is aligning with BRICS, but actually India is in BRICS? There's a lot of confusion. This deadline was self-imposed. It feels very fluid. You have the president saying he's sending out letters today at noon. You have his Commerce Secretary, Howard Lutnick, standing next to him yesterday on the tarmac, almost giving a little asterisk as the president is talking about tariffs. He's like, well, actually, August 1st is now going to be when the tariffs come into effect. So if you are a trading partner, you realize you really have between July 9th and August 1st until potentially they kick the can down the road again.
A lot of people in this market just want to move on. Decent case study for that was last week, Vietnam. They come out with tariffs on Vietnam of 20%. They sound really high, but they're so much lower than April 2nd of 46%. Market just wants to move on. I'm not sure this is what many investors want to see. Drag this out for another several weeks. Extend and pretend. Set something, move on, seems to be what a lot of people have said to us they'd like to see.
Right, but that's not going to be how this works, because even if you come out and say you have a deal, there's still going to be negotiations happening behind the scenes. And we've heard that already from Vietnam officials saying that we're actually still working on trying to make this more concrete. The president almost immediately rushed. You can almost feel the excitement in his truths. He said, we have a deal. I'll be back with the details. And then he came back with the details. And Vietnam said, well, actually, we're still working on some of those details. I think the European Union spokesperson put it best, talking about the fact that Ursula von der Leyen, the president, spoke this weekend. This is the beginning of the end. This means this is going to drag on a lot longer when actually comes to full throttle trade deals. What we see right now is just frameworks and agreements.
Or the end of the beginning.
Yeah.
Because this might take a long, long time. Henry Detrays of Veda Partners with us about 15 minutes ago saying what Anne-Marie said repeatedly, this is a feature. This is going to be an ongoing feature of this administration, according to Henrietta and others. Want to turn to this story. President Trump is criticising former First Buddy Elon Musk's plan to start a new political party. The president calling it ridiculous and saying that third parties have never worked in the US.
They really haven't worked in the U.S. except in the late 90s with Ross Perot. That was probably the high watermark when it comes to political parties. I think you bring up an interesting point. Potentially Elon Musk can shift individuals in specific districts or specific states. The problem, of course, and you're seeing the Tesla stock, is what does this mean for his relationship with the most powerful, important person, not just the United States, but maybe in America? I think what's interesting is what this potentially does to him abroad. Wall Street Journal this morning is saying that Beijing no longer views Elon Musk as a geopolitical asset and is going to shy away from him publicly, courting him, which they were doing because he was so tethered to Trump. Now you're going to see a lot of heads of state not want to be associated with him because of this feud he has with the president.
Tesla down in the pre-market by 6.5%. Dan Ives of Wedbush pretty clear about this. He's bullish the name. $500 price target, outperform rating, all of that good stuff. Very, very bullish on autonomous vehicles, robo-taxis. He thinks the board should step in. That's his opinion this morning.
What's the red line for the board? Because we've seen this feud already. It feels like one step forward, two steps back. There was supposed to be this phone call. They were supposed to make peace and be friends, again, maybe in quotes. What is the red line for the board? Is this political party? Or potentially is this enough for them to say, if you continue on this, then you're going to have to maybe step away?
That's the latest on Tesla this morning. Let's squeeze in some foreign policy. The Israeli Prime Minister, Benjamin Netanyahu, is set to visit President Trump at the White House later today. Trump telling reporters a hostage deal with Hamas could be ready as soon as this week.
Feels like there's some fresh momentum on this. We had negotiators from Israel and Hamas, together with Qatari and Egyptian mediators, meet over the weekend in Doha to try to formalize an agreement. The president is feeling like he did have this huge victory in the Middle East when it comes to what happened with Iran and Israel, and this would be the final stage. And the president really needs this finalized before he looks at broader Middle East peace agreements. And something we saw in the first Trump administration, of course, was the Abraham Accords. He wants to see another version of that, particularly with Riyadh and Israel.
I think we'd all like to see further de-escalation in the region, that's for sure. That's the latest on Israel and the Israeli Prime Minister's visit to Washington. Let's turn back to trade. Treasury Secretary Scott Bessent saying that some trade partners' tariff rates will boomerang back to Liberation Day levels. Joining us now to discuss is Kate Kalukowicz, the former White House trade official and former senior USTR trade negotiator. Kate, welcome to the program. Is this the beginning of the end or just the end of the beginning?
Well, I think this is President Trump at his best when he's bringing the pressure and supporting his negotiators. I think this is his favorite time of the negotiations, when he can be extremely maximalist. And I think as a trade negotiator, it helps to have a leader like that pushing for the end, pushing for the negotiations to get over the finish line, and providing that sort of threat that helps his team actually tell their counterparts he's serious.
Kate, what determines whether you get a UK outcome, a Vietnam outcome, a China outcome, or something much worse?
Well, I actually think that's quite an important question. And the Vietnam deal sort of shows that there are two different trajectories here. Let's set China to the side for now, because I think that's a separate type of negotiation. But you have a UK outcome and you have a Vietnam outcome. And I think for the list of countries with which the United States is actively negotiating, you see two different pathways here. One for the more developed economies, probably looking for something like the UK got, and those more export-heavy economies that receive those very high tariff rates. Maybe the Vietnam deal reflects what the Trump administration is putting on the table.
Is the Vietnam deal actually done, though?
Well, back to our end of the beginning, you're right, Anne Marie. These are framework agreements, and I think you described it perfectly. The truth announcing the Vietnam deal was, I think, quite gleeful. The Vietnamese, of course, later in time said, we still have a lot of things to work out here. But let's make no mistake, this is a really important outcome. The Vietnamese, of course, were on the hook for very high tariffs. They've been, the recipient of the ire of the Trump administration going back to the first time around the increasing trade deficit, particularly as it relates to China. The longer term play for the Vietnamese, however, is going to be how it manages this very, very challenging place they find themselves between China and the United States. And these will be the details on the transshipment that they're going to have to work out.
When you look at what's coming up this week, the president says at noon he's going to be sending tariff letters out. You have the European Union, the Commission, talking about the fact that the president got on the phone with Ursula von der Leyen. They're looking to get some sort of framework before July 9th. What buckets are different countries in?
Well, I mean, I think you've seen the president, his surrogates talk about this smaller set of nations or economies which are much further along. I think the president had been quite hopeful last week. Vietnam would be the first of several announcements that day. And you've seen him signal that talks with India are quite forward, that talks with the EU are quite forward. Obviously, he's been a little frustrated with where things are with Japan. But I think these are the countries that we can expect some outcomes this week if negotiators can get a few of these wrinkles, ironed out.
These are also the same countries, though, that, given the fact that they are in these deep talks, will get extensions. And is that what you think Commerce Secretary Howard Lutnick was talking about when he talked about August 1st?
Well, again, I think the president is trying to signal to these countries that they need to stop delaying. He had hoped to have these deals ready last week. I think his this new notion of letters going out is really his way of ratcheting up pressure. Typically, when we see tariffs go into place, there is somewhat of a delay to allow importers some time to adjust. So I think we'll still have to see exactly when things are implemented. But I really do see this more as the president trying to ratchet up leverage.
How surprised are you, given the fact that you were a trade negotiator under Trump, that Japan and the European Union have basically swapped fates?
Well, Japan is quite interesting because I think the president was surprised when he got the Nippon Steel deal across the finish line. He probably suspected that would be sufficient to wrap things up. Of course, the Japanese really want to see an outcome on cars, and the president does not seem inclined to deliver that. Then, of course, when you're negotiating with democracies, this is always the challenge. Japan has an election coming up, which constrains its negotiators. So, it is quite shocking, I think, that we've ended up in this place. But this is part of being a trade negotiator with governments which have to be responsive to their own domestic constituencies. Europe, I think, will get across the finish line so long as we continue to have these leader level discussions. As we've discussed before, the European Union is a very challenging negotiating partner because it does represent 27 different countries. And so if you don't get right to the leader level, you don't get right to these big commercial deals, it's very challenging. So if President von der Leyen and President Trump maintain this dialogue, I think we can get that one finished.
Hey, Kate, appreciate your view. Kate Kalukowicz there, joining us on the latest trade push down in Washington, D.C. To Kate's point, the fact of the matter is for the Europeans, to have President Trump set such a high-pressure campaign, to have the Europeans turn around and basically accept, based on our reporting, a 10% tariff without much pushback is quite something.
It's quite something. But also when it comes to the European Union, how long is this going to take? Because to Kate's point, this is dozens of countries with the Commission representing them. This could be very challenging. Domestic politics is going to be hard in Japan. We heard from the Prime Minister of Shiba yesterday. He said we will stand firm because they have an election coming up. So they can't look like they're placating to the United States of America, especially when it comes to two big industries, autos and rice.
If you are just joining us, welcome to the programme. Equity futures this morning, so far at least, just slightly negative. We're down by 0.26%. With an update on stories elsewhere this morning with your Bloomberg Brief. Back with us, here's Yahara. Hey, Yahara.
Hi, John. We start with the latest out of Texas. At least 80 people have died and dozens more are still missing following Friday morning's flash floods in the city of Kerrville, where water levels on the Guadalupe River rose by 26 feet in just 45 minutes. Now, officials are warning the casualty count will climb with more rain in the forecast. Meanwhile, Iran's supreme leader Ayatollah Ali Khamenei appeared in public this weekend. According to Iran's state media, it was his first appearance since the 12-day war with Israel last month. After weeks of sheltering in a bunker, the New York Times reported Khamenei attended an annual Shia religious ceremony held at his compound. And OPEC Plus agreed to a larger than expected production hike for the fourth straight month. The group increased supply by 548,000 barrels a day for August, citing summer demand as reason for optimism that the extra barrels could be absorbed by the market. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate it. More from Yahara in about 30 minutes' time. Up next on the programme, boomerang tariffs.
We're going to be very busy over the next 72 hours. Then on August 1st, you will boomerang back to your April 2nd tariff level. So I think we're going to see a lot of deals very quickly.
Up next, we'll catch up with Mike Parle of BlackRock, live from New York. You're watching Bloomberg TV.
Bloomberg launches our inaugural 25 African startups to watch list.
About 2.5 years ago, we created a solution. We are able to generate refrigeration using the sun and water. We're able to store energy in the form of ice, as opposed to storing energy in the form of lithium batteries. We're integrated in every refrigerator a pay-as-you-go technology, allowing individuals and small businesses to be able to pay as low as $10 to own a refrigerator.
Uncover is a women's wellness brand that is specifically made for women of color. It's based in Africa, which is the most underserved beauty market in the world. We are making Africa a priority and not an afterthought. We believe that the population on this continent deserves to be formulated for, heard, and we are giving this consumer a voice.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Live from New York City, welcome to the program. Equity futures so far on the S&P. No drama. We're down 0.25%. We're down by 0.4% on the Nasdaq 100 as we come into this week at all-time highs. Under surveillance this morning, boomerang tariffs.
We're going to be very busy over the next 72 hours. President Trump's going to be sending letters to some of our trading partners saying that if you don't move things along, then on August 1st, you will boomerang back to your April 2nd tariff level. So I think we're going to see a lot of deals very quickly.
So here's the latest this morning. Stocks falling as U.S. trading partners rush to finalize trade deals ahead of President Trump's Wednesday deadline. Mike Pyle of BlackRock writing, as macroeconomic and market uncertainty persists, it's time to reimagine alpha. Mike joins us now for more. Mike, good morning.
Good to be here.
It's good to see you, sir. We'll talk about various trading strategies and the ones that have worked so far this year. But let's just start top down, super macro. What are you and the team expecting this week?
So I think the bottom line is we see this week as part of a longer term picture where a lot of trade policy is going to get made, but there's going to be some twists and turns in the road along the way. I think as we heard from Secretary Bessent, August 1 is going to be a pretty relevant point in time. This week's important, but I think what we're looking for is, a lot of discussion, a lot of frameworks getting announced, but this week is not the one focal point in time.
We've had some guests come on this program. Jim Carroll of Morgan Stanley comes to mind, who believes the second half of 25 is the half of clarity, certainty. If the first half was uncertainty, the second half is clarity. Do you share that view?
I mean, I think on a relative basis, that's absolutely the case. I mean, the first half of 2025 was peak uncertainty. If you look just in the last week, we've gotten clarity on what the fiscal policy picture is going to look like, likely for the balance of the Trump administration. And I think as the days and weeks accumulate, we're going to get greater certainty around what the trade policy posture is going to be, country by country, but globally as well.
You mentioned August 1st. Can you believe any of these deadlines if they just keep moving and they're self-imposed?
Well, I think that's why the John's prior question is exactly the right one. It's all about the direction of travel, of uncertainty. Is there any fixed point in time where all of this is going to be settled? I wouldn't necessarily bank on it, but is the direction going to be towards greater clarity, greater certainty, more frameworks, more stability? That also seems pretty likely to be the case.
Most people were thinking it was going to be 10% baseline tariffs across the board, basically a ring around the United States. But then the president came out talking about Vietnam, and they have a much higher tariff level. Are you expecting some countries to get higher than 10%?
So I think Vietnam is an interesting case, and I thought your prior guest kind of really got at it. You know, I think regardless of who was in charge in Washington, this issue of Chinese transshipment, China as using third countries as a jumping off point for trade would have been a contentious one. And I think Vietnam is kind of one of those countries that's really in the focal point. I mean, I think what we saw announced last week was 20% tariffs, but 40% on Chinese transshipment. And I think that what it gets at is there's this issue of, are countries like Vietnam going to be a hub that's a jumping off point for access to the U.S. market? And how does this U.S. administration think about both striking deals that matter strategically with countries like Vietnam while also being really focused on some of the issues like around Chinese content, Chinese transshipment that are important for President Trump and frankly would be important regardless of who the U.S. president is?
You have a unique perspective because you sat across these people just a year ago, especially the European Union. Are you surprised by how quickly they've changed their tune when it comes to the Trump administration?
You know, like I said, I think one of the things that's noteworthy and one of the things that I think we expect is this is going to be a path with some twists and turns. And I think markets are expecting that. Markets are, you know, counting on it even. But, you know, last time I was here in the studio, we talked about the path with respect to Europe, that path being a pretty challenging one. I think we expected the path that Japan would be more straightforward. Here we are 6-7 weeks later, and it's just the reverse. But I think that highlights that there's a direction of travel. That direction of travel is towards greater clarity, greater certainty, but the twists and turns are going to take us to some unexpected places along the way.
Who has to stomach the tariffs? That's the clarity we really want here. Is it the European exporter, the US importer, the US consumer? What's your base case now, and what are you looking for to some kind of guidance on that very important issue?
So, in terms of the macro outlook and
well, let's try and decide who's paying the tariffs, who has to stomach this. Whether it is the US importers, which by definition will have to, but I want to understand who's going to burden the cost. Will it be the European exporter, the US importer, the US consumer, and then try and get our hands around this issue of the US versus the rest of the world when it comes to equities?
Listen, I guess I'd say a couple of things. One, you know, what's clear, and we hear this from the Fed and other economic forecasters, is this is a negative growth shock. This is a positive shock for price levels. That's true in the United States. That's generally true globally as well. So everybody's going to bear the burden of this to some extent. I think one of the things that's been surprising has been the degree to which we haven't really seen this shock yet play out in terms of the price data or in terms of even the activity data as well. And I think what that reflects is, in some ways, the uncertainty that we've seen has two sides of the coin. One side has been huge swings in market sentiment that have really characterized the first half. The other has been corporate leaders, real kind of actors in the real economy being frozen into place. And yes, that's true in terms of no new capex or limited new capex. That's true in terms of limited new hiring, but it's also true in terms of cautiousness on raising prices, cautiousness on doing anything irreversible with respect to their workforces. And that's because it's a pretty uncertain environment, and doing things that are fixed and locking them into place is not what they want to do. So again, I think it's important to bear in mind that there's a lot of uncertainty out there precisely because actors in the real economy have wanted to pause to see where we're going. And I think we'll get more clarity on that in the back half of the year.
Investors haven't paused. We've seen massive reversals in this equity market, particularly here in the United States. What strategies are working right now? And what strategies do you think will continue to work through the rest of this year?
Yeah, so I'd highlight two things in particular. You know, one, on balance, we still prefer the U.S. equity market to other markets globally. You know, and I think that requires that you kind of hold two things in your head at the same time. Yes, the U.S. is the source of a lot of uncertainty. We've been talking about that. And yet at the same time, the U.S. is also the single biggest destination still for dynamism, innovation, resilience. And that's particularly true in the U.S. corporate sector, particularly true in the technology sector in particular. Those exposures that really get you access to AI, the technological transformations that we're seeing, that's a U.S. story, and that's one that we continue to think investors should get exposure to. The other would just be to say, you know, this is a very uncertain macro environment. Taking big swings at the bat in such an uncertain environment around making big macro calls, that's a hard thing to do if you're an investor. finding strategies that are going to be primed to outperform, that are more market neutral, that aren't taking big swings in the bat, things like systematic strategies that can deliver alpha in a bunch of different types of market environment and provide liquidity while they're at it. Those types of things that are maybe a little less focused on the macro, a little more focused on delivering alpha in uncertain environments, those are the types of things that we think portfolio managers are really capitalizing on.
Mike Parr of BlackRock. Mike, appreciate it. Thank you, sir, for sharing some of your thoughts on policy and what's working right now. Up next on the program, Katie Kaminsky of Alpha Simplex, Sheila Kahlu of Jefferies, Stephen Stanley of Santander, and Kathy Jones of Charles Schwab.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in.
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I never doing that again.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
As Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me. Now we're playing.
Yep, now we're playing. First and foremost, I am a capitalist. The capitalist system is the best system in the world. There isn't another one that works as well.
Citigroup moves $4 trillion a day.
5.
Wall Street used to be a place.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Now it's more of an idea.
The optimism here is infectious.
You think our New Yorkers are negative?
Yes.
Anything that trains people to understand probabilities and just think through things with a greater degree of nuance is a service to humanity.
I hope you survived the day.
I did. It was a busy day.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people,
the tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
the transactions,
Really a record-breaking moment.
Crypto VC is back.
and the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacroix, the ECB forum in Central Portugal, and this is Bloomberg.
The fact that the unemployment rate is going down is something that, of course, is quite surprising.
It feels like a lot of optimism has been priced in the market, but we do expect a soft patch later this year.
The story here is not the headline.
If the labor market's okay, their urgency to cut goes down.
Base case, we have them not cutting. Certainly July is off the table.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Just a nice, quiet summer Monday to kick off a trading week. From New York City this morning, good morning. Your scores look like this morning. All-time highs into Monday. Equity futures pulling back by just 0.2%. We're down by a third on the Nasdaq 100 as we wait for the self-imposed tariff deadline of July 9th to come up quickly, just 2 days away, blurring the lines over the weekend as to just what the deadline actually is.
Feels like we're on parallel tracks, right? Because you're saying it's quiet, but at noon today, the president's talking about the fact that the tariff letters are going out. Is he going to share them with the rest of the world? We still don't have the language when it comes to what they agreed upon with China. And then at the same time, the Commerce Secretary said rates are going to be set, but they don't come into place until August 1st. And what I continuously hear, as I heard from the Swiss trade team, is that this administration was pretty honest with them. If we are in discussions with you and we're not done by July 9th, you'll get an extension. So who's getting a letter? Who's getting an extension? Who's getting a higher or lower tariff rate from April 2nd, Liberation Day? A lot of questions to be answered.
A lot of people just starving for clarity. We've said that a few times over the past few hours or so. Mike Powell of BlackRock saying that's exactly what you're getting on taxes in the last week and on trade maybe in the next several weeks.
So what he's saying is he can't pinpoint an exact date when potentially some of these deals will come to fruition, but it's the direction of travel. The direction of travel has been a maximalist approach from this president on Liberation Day, April 2nd, a reprieve for when negotiations are happening, and then potentially you will get some sort of deals. I think what everyone has been really shocked about was how Japan and the European Union have seemingly switched places. Japan was going to be first out of the gate. Well, Japan has an election coming up. So it's a little bit challenging for them to make a lot of these concessions. And the European Union, I think, got the message. You're on the back foot and you're going to be left behind. And now we've been quickly rushed to the start of the queue.
Max Kempner, HSBC, publishing just moments ago. To us, the big story in July is not this week's tariffs deadline. It's the start of the reporting season. Delta Airlines this week, JP Morgan next week. He thinks the bar is low. Says the following: any dip this week has to be bought very quickly. This market's seen a massive reversal since the lows of April. Just like that, very quick.
And what's going to be so interesting about when it comes to earnings season is how much is any of this impacting the U.S. consumer? Are they still going out? Are they still spending? Are they still traveling? Or are tariffs starting to bite?
Equity futures this morning on the S&P just slightly softer. We're down by 0.2%. Coming up this hour, we'll catch up with Katie Kaminsky of Alpha Simplex as trade tensions weigh on markets. Sheila Kolu of Jefferies looking ahead to airline results, and Kathy Jones of Charles Schwab as traders push out rate cut bets. We begin this hour with stocks pulling back from all-time highs as President Donald Trump reignites trade concerns. Katie Kaminsky of Alpha Simplex writing equity trend signals are still modestly strong given the volatility and uncertainty in recent months. Katie joins us now for more. Katie, welcome to the program and good morning. It feels like sentiment is quite one-sided now after the massive reversal over the last several months or so, yet people still come on the program and say the pain trade is higher equities from here. Do you agree?
I would have to agree that that's what we're seeing, especially in the market data. What was interesting, though, is we did see a little bit of a pivot last week where you saw small caps and perhaps more domestic focus being in ahead. And so I'd say that, you know, the general theme has continually been a little bit more pro-growth and positive for equities, which is something I wouldn't have guessed a few weeks ago in particular.
Katie, you're seeing that in equities. Can you say you're seeing the corresponding thing in the bond market at the same time?
Definitely not. I'd say that the bond market has been very tricky this year. We've seen very mixed signals across different parts of the curve. We've definitely seen short signals on the long end suggesting that yields need to be higher over long term. That may suggest some uncertainty about where rates are going to go over long horizons. But in general, it's been very tricky to trade the bond market recently because there's just been this push and pull between when are rates going to be cut and also just, you know, in general, what are the impact of all these macro themes on fixed income given this?
Are you surprised the bond market didn't get a vote on the One Big Beautiful Bill?
Good question. I mean, I think you haven't seen that much movement. You are seeing some steepening as well recently, like particularly today, you're seeing that as well. So I'd say that, you know, the bond market is not voting yet. It definitely voted on what was going on in Liberation Day. So I think, you know, we just have to wait and see when, you know, bond investors are really voicing their opinions. But really right now, very mixed in fixed income.
Do you think bond investors are going to be paying close attention to this deadline this week, or they feel like it's self-imposed and already the administration has signaled that a lot of these trading partners are going to get more time to really work out the agreement with the United States?
Well, I mean, if you look at just how much movement you have today and how the market has responded to recent events, it's almost that the market is sort of shrugging off some of this news because nothing is really a big shock. It's everything that we've been discussing along the way, and there's been continual backtracking and back and forth. So I think people are waiting to know the real results before they start positioning themselves for the impact of those potential trade decisions.
Katie, in the meantime, what's working in the commodity market?
Not much, I would say. I mean, I'd say that commodities have been up this month, but there hasn't been big swings. Obviously, people have been following oil and energy in general. But when you look at things like gold, which had also been pretty much on a tear this year, it has been sort of stagnating some as well. So I think, looking for that demand increase that might potentially occur because of having stronger growth is something we're kind of seeing right now this month, that commodities have been up, but it's not particularly strong yet, but it's the potential for a trend going the next few months.
Katie, as I listen to you talk about commodities and fixed income, it just sounds like you're seeing convictionless markets in certain asset classes. Would it be fair to describe them as that?
Precisely. I think what we have seen is strong conviction in equities, a weak dollar, but everything else has been kind of wavering around in sort of anticipation to understand the impact of these trade negotiations, but also just sort of, is the U.S. economy strong enough to actually follow through with this narrative? And that's why I think other asset classes are really really waiting and sort of treading back and forth.
Katie, do you find that difficult to reconcile? While we are seeing that conviction in places like equities and in foreign exchange, why you're not seeing the same thing elsewhere?
Definitely so, but I mean, I think these are just at different time horizons. I think equities move quickly. I think the bond market needs a little bit more clarity on multiple economic factors, such as trade, as well as, the overall health of the U.S. economy and the job market. And those are a lot of themes to reconcile, particularly with a Fed that hasn't moved yet. So I think bonds doesn't surprise me, but commodities, I think they're sort of in the wake of what, I would have expected them to move more just with the tariffs themselves, just fundamentally, but we still haven't seen that yet. So that I think helps investors be less worried about this inflation concern or other concerns related to trade in the short term.
Stuck in limbo. Katie, appreciate the update. Katie Kaminsky there of Alpha Simplex on the different tone we're experiencing in both equities, bonds and commodities alike. This morning, equity futures erasing losses. We're down by about 0.2%. Some more clarity, hopefully, on the trade front in the next few days.
Potentially, we can get more clarity at noon. The president saying there's going to be a number of letters sent out to these trading partners setting new rates. Basically, this was your rate April 2nd. This is the new rate we decided to readjust for. And people are expecting that. What's going to be interesting is what happens with the main trading partners. Where are they on the European Union? The EU thinks they're going to get a framework before July 9th. That is a complete reversal than what we were talking about just 2-3 weeks ago. When I was with the president in the Netherlands, the European Union was saying they were going to retaliate against a 10% baseline. Like a snap, that went out the window. So they clearly want something done. And Japan and India, of course, also going to be incredibly important.
We explored this briefly with Kate Golubkowicz about 30 minutes ago. She, of course, was a trade negotiator under the president's first term way back then. And she made the point that the deciding factor that goes into whether it's a UK outcome, a China outcome, a Vietnam outcome, I don't think is well understood at this point. What determines what kind of outcome you actually get?
I think it depends on what the president is looking for with each trading partner. Mike Pyle talked about transshipping when it comes to China. That was really important when it comes to Vietnam. When it comes to the UK, I think also part of it was timing. They want both parties really wanted to get to yes. And they were willing to sacrifice, definitely on the UK side, something to get to yes, because they've been trying to get a trade deal with the United States for years. When it comes to China, though, it's really difficult where we are. It feels like we're only taking the first step of a very long road when it comes to some sort of bigger agreement between the United States and China.
Slow start this Monday morning, expecting it to kick off as the week grows a little bit older, to pick up when we hear from the president in the next several hours, hopefully, on which letters he sent and to whom and what kind of tariff levels we could see in the next several days. Let's give you an update on news elsewhere this morning with your Bloomberg Brief. Here's Yahara. Hey, Yahara.
Hi, John. We begin with the deadly flooding in Texas. Rescuers there are still searching for survivors after catastrophic flash flooding over the weekend. The disaster killed more than 80 people, including many children who were attending youth camps. It's feared the casualty count will climb with more heavy rain forecast in the coming days. Meanwhile, the Trump administration is preparing to send tariff letters, as you were just speaking about, to dozens of countries, with the administration's 90-day tariff pause set to expire this Wednesday. Treasury Secretary Bessent telling American media moments ago that his mailbox is full of new trade offers, and we'll see several deals announced in the next 48 hours. And President Trump is planning to restrict shipments of AI chips to Malaysia and Thailand. Sources telling us here at Bloomberg the move is part of an effort to crack down on suspected semiconductor smuggling into China. The regulation would mark the first formal step in President Trump's overhaul of former President Biden's AI approach. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate it. More from Yahara in about 15 minutes' time. Up next on the programme, the Morning Calls. Plus, Sheila Kahlu of Jefferies looking ahead to airline earnings over the next several days or so. That conversation up next, live from New York. You're watching Bloomberg TV.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
I'm David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
The Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The opening bell 1 hour and 16 minutes away. Equity futures on the S&P 500 negative by just 0.2%, down by a third on the Nasdaq 100. On the Russell this morning, softer by 0.3%. That's the price action. Let's get you some morning calls. Kicking off first with William Blair. Downgrading Tesla to market perform, citing headwinds from President Trump's big, beautiful bill. That stock is down by 6%. Your second one comes from Raymond James, double downgrading Wells Fargo to market perform, saying the stock's favorable fundamentals are already reflected in its valuation. That stock is down by 0.7%. And finally, UBS lowering its price target on Delta Airlines to 63, looking for an inline second quarter earnings report. That stock is positive by 0.25%. Let's stick with Delta. Earnings due before the opening bell on Thursday. Sheila Kahlu of Jefferies keeping an eye on travel demand this summer, writing, "We observe that while passenger counts remain below last year's level, the gap has been narrowing." Sheila joins us now for more. Sheila, good morning. Good to see you.
Good morning.
Let's get back to February. February was when the warning started, and it started from Delta Airlines warning about things like DOGE, consumer sentiment, air aviation issues as well. What do trends look like since the start of this year?
It's very hard to cherry pick these airlines. I think they all have an uphill climb, to be honest. What we're looking for is sequential improvement, Q1, Q2, Q3, Q4. Q1, the exit rates in March were down mid to high single digit for domestic mainline cabin. That's pricing. We're assuming some improvement, but still down about 3% in Q2, and then some improvement as we exit the year up. So we have an improvement priced in, but I think trends are stable at best, and we're seeing discounting in mainline cabin in the US and Atlantic.
Are you seeing that at premium and budget, budget and premium?
Mostly in the budget, in the mainline, in the back of the cabin. And Q2 is a big quarter. It represents about 45% of EPS for airlines. So these trends being in line to stable to March is not uplifting.
Have you seen demand, though, continue when it comes to premium cabins and business class?
It seems like it is for now, but we're seeing trends pretty stable. There's really no data source out there, but we're not seeing improvement. Even with TSA volumes at peak in June and over the weekend, they're only up 1% year over year. TSA volumes for travel are flattish, so you're not seeing consumer really improve.
When it comes to consumer concerns, how much is tariffs lingering for the consumer as well as for the airlines?
I think unfortunate for Delta, they're going to report again on another tariff day. So I think that still lingers, and you're seeing corporate hold back a little bit. So I think you'll see more of the same, an improvement from the March trends, but certainly not a big improvement in Q2, which represents the biggest quarter, and exit rates for Q4 are already pricing in some positivity.
How difficult is it for, say, Delta? They're going to be reporting potentially on a tariff day, for them to talk about this uncertainty when the goalposts seem to be moving out of Washington.
Yeah, I think, we've seen a big move in airlines, up 15 to 20% since April. So they're already pricing in this improvement. So hence why we prefer our commercial aero coverage rather than our airline coverage. Because I think you still have some downside risk to the airline names.
I think in the tax bill there was $12.5 billion set aside for the overhaul of air aviation safety. Talk to us about that. And can you calculate just how much the consumer has held back because of these aviation issues over the last year?
There was some book away with the incident in D.C. For American Airlines. Similarly, Delta saw that too. So you see, pockets of holding back, but I don't think I think it's more of a macro concern that airlines have and corporates have that are holding them back.
Well, let's pick out Newark and let's pick out United Airlines. I know a lot of people, and this is just sort of anecdotal conversations that we've all had. We've had the same conversation, avoiding Newark because they don't want to see their plane cancelled because of aviation issues
we could get back
and air traffic control.
Scott Kirby, I think over the weekend tweeted, or whatever it is, on X, said Newark was the best airport in June, and it's true. They had the lowest cancellation rate in the month of June. Cancels for over the weekend were 4%. Delays were 25% because it was a rough weekend for travel. Orlando, Denver were some of the worst performing airports, but good news is United seems to be back at Newark, and that represents about 10% of their traffic.
Is that because of what Newark's been doing or United's been doing?
I think a little bit of both, but the air traffic controller shortage still exists. That's still a problem that we have to improve over. It'll take 2 to 3 years, and that's where some of the providers will help with that.
And how much of what John's talking about, the one big beautiful bill, and some of that funding, how much could that be actually a boost to the airlines?
A bit. It'll just help sort of expedite systems. So folks that make the systems are Raytheon Technologies, Leidos, SAIC is a company that trains air traffic controllers. So those are the big beautiful bill will really help push those through, but it represents 2% of sales for most of these companies, so not a big needle mover.
That's the airlines. Let's talk about the airplanes.
Sure.
Let's talk about Boeing.
Sure.
What position is Boeing in now?
In a decent position. You're seeing deliveries. We think June deliveries could be at a rate of 42 a month on the MAX. We had projected 32. So you're seeing 10 extra in June. You take that rate forward for the next 6 months, it's an extra $500 million to $1 billion of cash flow for Boeing. So Boeing is steady as she goes. It looks like things are okay, and tariffs are working in favor of them.
Speaking of tariffs, we've seen NVIDIA used as a chip in foreign policy, excuse the pun. Is Boeing in the same position, or at least a similar position?
That's been our thesis. What else could you sell for $70 million to $200 million and sort of help reduce trade deficits and use it as a bargaining tool? We saw that with Vietnam a bit. Unfortunately, the Paris Air Show was light in order volume because of the Air India incident, which we still haven't heard much about. So I think those are yet to come.
China had a ban on its airlines accepting Boeing planes, and it lifted it. So to John's point, do you expect this lever just to continuously be pulled, especially when Trump is in office and he likes to dial up the temperature before he dials it down?
Yeah, I think we think about global production at 1,700 a year. Whether that comes from Boeing or Airbus, you choose the split. But countries could only order from two companies, essentially.
But does the political environment give Airbus some help as opposed to Boeing?
Not really. Their production is really capped. It's hard to go above certain rates. So their production capacity is going to be 75 a month on their biggest narrow body, which is the A320, versus 52 for Boeing on the 737. Airbus is in the 60s right now, so their production rate is going to be capped. So airlines have to go to Boeing at some point, which they are. We're seeing that momentum pick up. We just didn't see the order momentum, and the backlogs are 5 to 7 years, so you're pretty solid there.
Some better trends. Sheila, appreciate your time.
Thank
it's good
you.
to see you. Thank you. Sheila Coley there of Jefferies, the latest on the airlines and on Boeing as well. Boeing increasingly a chip in foreign policy in these trade talks. Let's get you an update on that. The Treasury Secretary, Scott Bessent, speaking just moments ago ahead of that self-imposed deadline this coming Wednesday. With the latest, here's Bloomberg's Tyler Kendall in Washington. Morning, Tyler.
Yeah, hey, John. Well, importantly, the Treasury Secretary Scott Bessent did also say, not when it comes to these trading partners that we're expecting to get these letters, but on China. He said that he would meet his Chinese counterpart in the next couple of weeks and that perhaps they could be prepared to move beyond issues of trade if Beijing is willing to negotiate. That would be a pretty substantial development if true, considering that we know that the White House is still raising concerns about allegations of Beijing slow walking the export of those export licenses when it does come to critical minerals. Now, when it comes to the deadline that's approaching, he reiterated that we could expect to see some deals in the next 48 hours. He did say that his inbox is full of offers, but that's pretty interesting since we do know that these letters are designed to try to spur our trading partners into putting their best offer onto the table. The Treasury Secretary has repeated that their goal here is to apply maximum pressure to try to get these countries to essentially offer exactly what the administration is trying to get out of them. We're going to have to wait to see how this develops. And then lastly, I'll add that he clarified that the 20% rate on Vietnam is an overall tariff rate. It doesn't stack on top of anything else, but he did say sector-specific tariffs could be coming down the line.
So something else to potentially worry about and for the market to have some uncertainty about. Tyler, when you're talking about these letters and the president's talking about them, are they to set a new rate or is it to negotiate? Are we back to square one? Are these rules of the road or is this all a negotiating tactic?
Well, Amory, our analysts at Bloomberg Economics say that there's sort of three different scenarios that we could see here, and it depends where the country falls, which bucket they fall into in terms of our trading partners. Some could be framework agreements like Vietnam, for example, but as we just heard from the Treasury Secretary, we're still getting additional details about what that looks like. The second would be negotiating, those countries that are trying to make good faith effort, as the administration would characterize them. Then perhaps they could get a little bit more leeway here to continue talks down the road. But then the third would be we are expecting some countries, actually the Treasury Secretary said it could be upwards of 100 trading partners, those smaller countries, to basically get that tariff rate dictated to them. That's likely going to be that 10% baseline tariff for those countries that don't do a lot of trade with the U.S. But it is interesting to see the messaging here because the White House really does want to show some sort of forward progress, and they're going to sort of pitch these smaller deals as exactly that, as deals, even though it doesn't appear a lot of negotiating went on.
And he's saying he's going to be sitting down with his Chinese counterpart in the next few weeks. Where is the agreement with China? Because they say they have one, yet we have not seen a single piece of language when it comes to this framework off of the Geneva and London talks.
Right. I mean, that's really what stuck out to me about his comments was that there appeared to be towards some sort of path to continue the negotiations. And Amory, you were there in London, so you know better than anyone that agreement in London was basically an agreement to Geneva, which we know was an agreement to keep talking. But it does appear that one of the holdups has been these export licenses when it does come to critical minerals. It was interesting to hear the Treasury Secretary say essentially that they could move past trade in these talks. We know that they want to look at some of those non-trade barriers like lax IP protection, for example. So perhaps this could evolve into a broader conversation since we know it is going to take time for a deal to be struck with Beijing. The last time the Trump administration made a deal, it took more than 18 months to accomplish the Phase 1 trade deal. And a lot of different things went into it, say agricultural purchases, for example. And we know that the administration has floated some sort of catch-up provision just to get back to the levels that were agreed back then. So this is definitely a moving and an evolving process. But one thing thing is for sure, the White House wants to show that they are making progress here and that countries are coming to the table as they try to get some sort of agreement put out there.
Tara, thank you. Tara Kendall down in Washington. Thank you very much. Michael Zezas of Morgan Stanley Publishing. Base case for them, kick the can.
Yep. This is self-imposed deadline. So I think you can also give the administration a little bit of leeway when it comes to kicking the can because they decided these deadlines. But if you don't have the deals in place, what else are you supposed to do? And I struggle to find that they have the deals all ready to go. Because the second the president has an ounce of feeling that he's going to have a deal, he goes immediately to Truth Social with excitement like he did with Vietnam.
Up next on the programme, we'll count you down to some of these trade deals. Plus, we'll look at the economic data following a much stronger than expected headline payrolls report. We'll catch up with Stephen Stanley of Santander. Plus, Yahira with your morning movers. Tesla falling as Elon Musk and his feud with the president picks up.
Flood of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince.
Concerned that not enough guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
The opening about 60 minutes away. Equity futures pulling back by 0.2% on the S&P. On the Nasdaq 100 down by a third on the Russell. softer by 0.4%. As we count you down to the opening bell with your morning movers, here's Yahira. Hey, Yahira.
Hi, John. We start with Tesla down 6% in the pre-market after Elon Musk launched his new political party. And the way Dan Ives put it to us earlier is that this move lower is on the prospect that this could sharpen the divide between Musk and Trump, and it could lead to Trump blocking Musk's autonomous driving plans, and also this idea that Musk is too distracted by politics at a time when Tesla needs his leadership. Next up, we have CrowdStrike. Shares of the cybersecurity firm are lower 1.3% after Piper Sandler downgraded the stock to neutral. But this is more of a price story than a fundamental story, because long term, they believe in the stock. But analysts say that CrowdStrike has already run past their price target, which is $505, and that they see limited upside from here in the short term. And we end with Walmart. It is a slight move lower, down about 0.25%, but I want to highlight it as we count down to President Trump's July 9th tariff deadline this Wednesday. The world's largest retailer is, of course, one to watch since it's very exposed to tariffs. Like many other retailers, it imports its products from toys to electronics from places like China, India, Mexico, and more. So a lot of questions as to where we end up with deals with these countries. And of course, as you've been asking, John, who shoulders the cost?
Yahira, appreciate it. It's a big question. More from Yahira in just a moment. Got to go back to the retailers. If you think about how things evolved over the last several months, you had April 2nd and Liberation Day. In the weeks after that meeting that took place on that Monday between the biggest retailers in this country in the White House, talking to the president about what could happen if those tariffs stayed on, was a pivotal meeting, not just for this economy, but for this market too. Absolutely.
Both sides maybe trying to explain what they were dealing with in terms of supply chains, who's going to eat the tariff rates, what that would mean for consumers and consumption when it comes to an administration that really ran on this pledge of affordability and to bring prices down. The retailers have been center stage when it comes to tariff policy.
It could be a big week for trade. It's a muted week for economic data following a strong payrolls report. Bloomberg's Mike McKee joins us now with more. Morning, Mike.
Good morning, John. Well, you, me, and Anne-Marie didn't get the message, didn't get the memo, but I'm calling this Work from Beach Week for people on Wall Street because there isn't much going on the economic front. We get the National Federation of Independent Business Small Business Survey tomorrow, and the New York Fed's survey of consumer attitudes, which the subcategory that everybody watches is inflation expectations. Neither of those likely to move markets, although we'll watch for small business hiring plans. On Wednesday, we get Fed minutes, but that's 3 weeks ago in terms of what they were thinking of, and they already told us how they thought it would affect the economy in the summary of economic projections. Thursday, we do get claims, and if there's any significant movement there, that may be the indicator of the week. Alberto Musalem and Mary Daly are speaking Thursday, but what can they say? It's trade week. Everybody's waiting for the letters, and then we have to try to figure out what it all means for the economy. Next week, though, next week is what you're going to want to pay attention to: CPI, PPI, and retail sales. So put on the sunscreen for this week, and then come back to the office and sit at your desk and watch Bloomberg at 8:30 Eastern Time. The question that we can ask going into this week is, what happens at the end of the week to uncertainty? The uncertainty over trade index put out by Baker, Bloom, and Watson right now very close to still record high levels. It's come down a little bit as the president's backed off on some of his tariffs, but this just suggests that people are not going to be spending until they have a much better idea of what tariffs are going to do to their bottom lines. So we'll watch for that and see if there's any impact. But still, not much market-moving news on the eco front this week.
Mike, it sounds like you're ready to leave. Before you go, could you just give us your assessment on payrolls last Thursday? Headline looked decent, first look. Second, third, fourth look, there was some pushback from a lot of people.
Yeah, you know, the thing that people have been watching is the unemployment rate, and the unemployment rate did come down, but largely because we had a big drop in the size of the labor force, almost all of which was accounted for by foreign-born workers. And if that's the beginning of a trend, then the economy could see problems ahead, even if the unemployment rate doesn't rise because the denominator is smaller.
Mike McKee with the update. Mike, thank you. Enjoyed the journey. Does he take the bus to the Hamptons, get a car, drive, train?
The jitney's right outside the office.
There you go. Get ready.
It's most convenient.
Mike's got his bags ready. Stephen Stanley of Santander. Luckily, he's not on the beach. He's with us. He had the lowest payroll forecast on the street. He wrote the following. The June employment report is on its face unambiguously strong. The deeper I delved into the details, though, the less impressed I became. Stephen joins us now for more. Stephen, good morning.
Morning.
What didn't impress you?
Well, I mean, the bulk of the gain, of course, came in the government sector. And I think that's likely a one-off, some seasonality around the end of the school year. There are a lot of education jobs added, which probably just means there were fewer layoffs at the end of the school year than the season was assumed. You look at the household survey numbers, the unemployment rate fell, but it didn't really fall for the right reasons. It fell because the labor force shrank. And at the same time that the labor force shrank, there was a huge increase in what the Labor Department calls people who are marginally attached to the labor force. So these are people that want to work, are generally looking, but for whatever reason in June chose not to look. That might be an immigration story, or it could be just random noise. But in either case, the fact that the unemployment rate also doesn't really tell us that the labor market's getting that much better.
How well understood is the supply side story?
I think people are talking about it. I think people understand that what we call the break-even pace of employment growth is probably a lot lower today than it was a few years ago when immigration was so strong. So I think that's the main issue, is that the labor market at the margin is tighter than it would be otherwise. Of course, on the other side, you've got weakening in demand at the same time, so it maybe helps to balance out a bit.
Cracks under the surface. Do you know how many times I've heard that phrase, cracks under the surface? How long before we see them at the surface?
Well, I think what you're seeing right now is really, in my view at least, is temporary. It's businesses who are holding off on whether it's capital spending, hiring, whatever the case may be, and waiting for policy-related certainty. We've now got the fiscal package through, so that's one piece of it. Now we're hoping that the administration is going to, tie a bow around tariffs at some point over the next few months. And at that point, I think businesses will be able to move on. And I think at that point, hiring may begin to pick up again. But until we get there, I would expect that you're going to see very soft job growth.
You said next few months. How disappointing is it for businesses that it's not Wednesday, as promised, July 9th?
Yeah, I mean, obviously the sooner the better. And I think if for most businesses, I would imagine the lower the tariffs, the better. But at some point, businesses just want certainty, right? So I think the hope, in my view, is that we get this thing, this whole issue resolved one way or the other by the fall.
The Fed also wants certainty when it comes to tariff rates, so they can understand policy and direction of travel, potentially of price adjustments. Is the administration itself, shooting themselves in the foot? They want Powell to cut rates, but Powell's basically saying, I can't cut rates until I know the tariff rates?
Well, yeah, I mean, it's a bit of a puzzle, I think. I think from the Fed's perspective, one thing that we've seen here is that the timing of the impact of tariffs on the economy has come a little later, right? We really haven't seen much in the data, certainly through May. Arguably, you saw a little bit in the jobs numbers for June. I think you'll see some in the CPI next week. Certainly retail sales have started to soften up a little bit, but it feels like the bulk of the impact is coming in the summer. The problem for the Fed is that they can't really decide what to do until they've seen the impact come through and then start to dissipate again, particularly on the inflation side. I think what they were expecting was that prices would shoot up and then come back down. Well, we haven't even seen them shoot up yet. So the Fed is definitely still in a waiting game.
So you're a September guy. Are you a September guy with risk skewed towards maybe later cuts?
Yes, because if the inflation story drags out longer, I think the Fed waits a little longer. That's all, and the Fed's been very explicit about that. That all hinges on the economy hanging in there, right? Powell has said we have the luxury of waiting because the labor market is still solid, the economy is still solid. Obviously, if the economy starts to fall apart, that's a totally different story.
Do you think he does have that luxury?
I think he will. I think, again, I think the underlying fundamentals for the economy are pretty good. I think what we're seeing right now is just the temporary impacts that are coming through from the tariffs. So I think the economy will muddle through, and that will give them some time. It's not going to be a comfortable period, right? Because I'm sure the administration is going to maintain the pressure. But so far the Fed seems perfectly willing to wait.
Well, to that final point, the outlook that you describe as you describe it, I'm just envisioning this Federal Reserve on a collision course with this White House. How do you think that's going to turn out in the next several months? Are we going to have that shadow Fed chair, and does that complicate things for you looking out to 26?
Well, I think the selection of the next Fed chair is definitely going to be a pivotal moment for the markets. Right now, we're all focused on tariffs in the short run, but once, again, presuming that gets resolved over the next few months, it feels like the next Fed chair is the next big thing for the markets. And the question in my mind is really, does the administration choose someone that the markets view as independent and credible, or do they pick someone that is perceived as just going to do the president's bidding? And that, I think, is going to be if he does that, I think it will be a problem. If he does that, what's the market reaction? Well, we've already seen little signs of trouble in the long end of the Treasury market. On the fiscal situation. If the markets are concerned that the Fed is not going to, is going to do the job on inflation potentially, that it feels like to me that's what you're going to see. You're going to see higher long-term yields, and it's probably not good for risk in general either. I'm not going to ask you for names, but what are the defining characteristics of someone who is credible and someone who isn't? I think it's two. One is what you would always say, which is qualifications, right? Someone that has, the economic chops, the policy experience, perhaps. And then the second one is going to be, do they have the appropriate distance from the White House, or are they viewed as a yes person? Stephen Stanley of Santander. I think we're all thinking about those names right now, and who's who. Definitely. So I think obviously it's those that are on the inside, like his NEC director, Kevin Hassett. He would be someone that I think the market would say, this looks like a yes man to the President of the United States, over, say, Governor Waller, who's already at the FOMC, who has had come out with his thoughts for months, even before his name was floated potentially to be the next Fed chair, someone who is viewed as credible by the market and also by his colleagues. Governor Waller, seemingly the easy option at the moment, at least. It's good to see you, Stephen. Thanks for dropping by. Lots to think about. Equity futures, by the way, still negative by about 0.25% as we work our way through to the opening bell. Mike McKee says you should all be at the beach. This is going to be a quiet week. The words of Mike McKee from just moments ago. Let's give you an update on stories elsewhere. Back with us with your Bloomberg Brief. Here's Yahara. Hey, Yahara.
Hi, John. We begin with the deadly flooding in Texas. At least 80 people have died and dozens more are still missing following Friday morning's flash floods. Water levels on the Guadalupe River rose by 26 feet in just 45 minutes. Meanwhile, Camp Mystic in Hunt, Texas confirmed this morning that 27 campers and counselors died in those floods. Meanwhile, President Trump says the U.S. will discuss a TikTok deal with China either today or tomorrow, and he says that they pretty much have a deal. Meanwhile, the information also reported that TikTok is building a new version of its app for U.S. users ahead of a planned sale to a group of investors. The company reportedly plans to launch it in U.S. app stores on September 5th. And as we've been talking about all morning, Elon Musk says he has formed a new America Party after President Trump signed his tax cut and spending bill into law that the former First Buddy repeatedly denounced. Musk made the announcement in a post on X after 65% of respondents to a poll on the platform backed the idea. That's one way to make decisions. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for this morning. Appreciate it. Up next on the program, we'll set you up for the week ahead, a quiet week ahead, as we approach a self-imposed tariff deadline of July 9th, a deadline that's already sliding. Plus, we'll catch up with Kathy Jones and Charles Schwab as traders push out rate cut bets. Live from New York, you're watching Bloomberg TV.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO?
It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function, it's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is
telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good, but as we strive for the great ones, sometimes those really, really good ones have to be left behind.
Chief Future Officer, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg. At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
The opening bell is about 43 minutes away. At the moment, equity futures are negative by about 1/3% on the S&P, 0.4 lower on the Nasdaq 100. As we count you down to the opening bell, just a sneak peek of this week's trading diary. At noon today, President Trump starting to send tariff letters. Looking ahead to Wednesday, President Trump's self-imposed tariff deadline and Fed minutes are due. Thursday, Delta Airlines earnings plus another round of jobless claims. As we count you down to noon, 3 hours to go until those tariff letters go out. Bloomberg's Tyler Kendall joins us now from the White House with more. Morning, Tyler.
Yeah, hey, John. As you said it, we're in the 3-hour countdown to 12 p.m. Eastern, where President Trump says he's going to start to send these letters out. He said we could expect anywhere from 12 to 15 countries to receive them. And our understanding is the letters are going to go out today, but the levies aren't going to be collected until August 1st, perhaps suggesting that there's some room for negotiating here for those countries that, as the administration says, puts their best offer on the table. And I'd point you to two quick developments that happened this morning. One is that President Trump threatened an additional 10% tariff on any country that aligns with BRICS after their summit over the weekend. And President Trump says they put forward anti-American policies. So that's one angle to watch here, particularly when it comes to India. And then the second, of course, as you well know, is that we got confirmation this morning that the European Union's Ursula von der Leyen held a phone call with President Trump over the weekend. It does appear to be a reversal in favor, really, for the EU, which had been at the back of the negotiating line.
Tyler Kendall with the latest. Tyler, thank you. Outside the White House, more from Tyler later on today. Looking ahead to that self-imposed tariff deadline, Kathy Jones of Charles Schwab has this to say. The tariff bump in prices is still on the horizon as the administration settles on deals that will lift import costs. We expect most of the increase to get passed along to consumers. Kathy joins us now for more. Kathy, welcome to the program. Just want to pick up on that last line. Why do you expect that most of the increase will get passed along to consumers?
Well, for larger companies, even though there might be some room to absorb some of it in margins, there's still enough demand in the economy that they can probably pass those along. Traditionally, that is what importers have done. They've passed along the any sort of excess cost from tariffs onto consumers, and I would expect them to do the same. And then if you're a small or medium-sized business with a smaller margin, profit margin, you're almost forced to do it, even even if it hurts your business, because you can't do business unprofitably for very long. So I think we should reasonably expect most of it to get passed along.
Kathy, if you believe it could lead to an increase in costs and prices, do you also believe it could lead to a slowdown in economic growth? And if that's the case, how would you push those views through this bond market this morning?
Yeah, that's the tough part. So many of these policies have sort of opposing forces. So on the one hand, yes, it boosts prices at least one time, if not for longer term, but also slows growth, right? Because some of the companies that are paying these tariffs won't be able to absorb the costs, or their consumers won't be able to pay the costs, and we'll get a drop in demand. So I think it has been the question all year, what comes first, the tariff price increase or the slowdown in growth? Our expectation is that the further we stretch out the tariff issue, the more likely it is that the growth issue will come first. So we are expecting slower growth in the third and fourth quarters and a rate cut by the Fed in September in response to a worsening job market.
But companies are always forward looking. Why haven't they passed on the tariff costs yet?
Well, some have. I mean, we've seen some evidence that companies are already taking advantage of the tariff news to pass along higher prices. Others clearly want to wait and see what the tariff cost is, because we still don't have a lot of certainty outside one or two countries, whether it's going to be a 15% or a 20% or a 10% or 25%. What do you pass along until you actually see it in the invoice? It's hard to know what to pass along.
Well, we're going to see potentially some rates today at noon, or they're going to be rates that are sky high that remind you of Liberation Day to revamp negotiations. The uncertainty looks like it's going to continue when it comes to trade at minimum until August 1st. How difficult is that going to be for the Fed to then potentially cut in September?
Yeah, it could push back a rate cut from where we've been anticipating September for quite some time. It could push it back until December or even into next year. And you saw that in the distribution of the projections at the last Fed meeting, where 9 members saw one or no rate cuts this year. And that's pretty much half the committee right there. So very much a divided Fed. And I think some of those who are not anticipating rate cuts this year are looking at that as a reason to hold off. And you also have, a contributing factor to all this is the weakness in the dollar, which will also add to inflation pressures. So, and maybe also limit what the Fed wants to do in terms of easing rates. So it's a really tough environment right now to make a policy call.
So, Kathy, looking across the yield curve right now, the difference between 2s and 10s is about 50 basis points, a tiny bit of steepness back into the curve. Do you think the 10-year rate, the yield at 4.36, accounts for some of the risk that you've described so far this morning?
I think it has some risk premium built into it, but it certainly could expand. So, 2s, 10s could move up another 30, 40 basis points pretty easily. And we saw a pretty good move at the long end when we finally got the budget passed. And I think there is room for further steepening of the curve, whether that's driven by, rate cuts and a bull steepening or a bear steepening. My concern is it might be more of a bear steepening at this stage of the game.
Are you more comfortable in the front end of the curve then, Kathy?
Yeah, we've been, kind of 5 to 7 years kind of trying to tread water here between, because you have these opposing forces, right? So it's really, you don't want to be too short because if the Fed does start cutting. You've already got the market discounting a couple of cuts. You're not getting as much yield there. But we don't want to go too long yet until we actually see the economy slow down. And then I think we'd be comfortable extending. So we're kind of in the 5 to 7 year area.
You're not alone, Kathy. I've heard that a million times over the past few weeks. Kathy Jones there of Schwab. A lot of people in fixed income think the belly of the curve right now seems to be the sweet spot. At the front end of the curve, the very front end on a 2-year at the moment, we're down by about a single basis point. The 2-year yield is about 3.87. On 10s at the moment, yields up by a single basis point, about 4.36. As we work our way through this week, looking ahead to earnings with Delta Airlines on deck later this week. Before we get there, we've got to talk about trade. These letters go out in 3 hours' time. Who are those letters going to?
And what are they exactly dictating? Is it just a new tariff rate, or potentially is the president announcing a deal like he did with Vietnam? And then you go back and ask the Vietnamese what went on, and they said, actually, we still are in discussions to get some more concrete proposals. The fact of the matter is, we don't know. What I do know is that if the president had deals, he would be announcing them immediately, especially some of these big trading partners. And I think that's where the Treasury Secretary said over the weekend, they're dragging their feet. Potentially, the president is trying to have a maximalist approach once again at the final hurdle. We heard that from Kate Kalukowicz, individuals who worked for him. But we just don't know yet what's going to be announced, who they're going to, if they're going to even release the language, because we're still waiting on the language when it comes to China.
You mentioned Japan. It's amazing to see how Japan has fallen to the back of the line. When a few months ago, a lot of people might have said they're at the very front of the line. All of a sudden, they've replaced Europe, just like that.
Because politics is local, and they have a domestic politics issue because they have an election coming up. And you heard the Prime Minister yesterday on local television saying we were going to, quote, stand firm, stay firm when it comes to these trade negotiations. But it's getting at the heart of really sensitive political issues inside Japan when it comes to the auto sector, when it comes to things like rice. This is what the Trump administration is trying to get the United States, more of their exports into Japan. And when you're up against domestic politics, you're going to have to say, okay, we can maybe do a trade deal with you, but we need to get over this election cycle.
It's nice to have a quiet start to the week. This week is going to heat up in a few hours' time, potentially, as the president sends out those letters in 3 hours and 4 minutes' time. Equity futures at the moment pulling back by about 1/3 of 1%. The opening bell about 34 minutes away. Coming up tomorrow, we'll be catching up with Ed Yardeni of Yardeni Research, Kelsey Barrow of JP Morgan Asset Management, ARK Invest CEO Kathy Wood, and Amanda Lynham of BlackRock. From New York City, I hope you had a peaceful July 4th weekend. Thank you very much for choosing Bloomberg TV. This was Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
You have had a number of games overseas in recent years, and in fact, you opened the season going to the opening game in Brazil. So do you expect to do more overseas games, and is that a part of your strategy?
It is. We had 5 last year. We expect to have 8 this year, which will be the highest we've ever had. Our hope would be at some stage to get to 16 games in the next few years. We think we can do that. I think it's an indication of the popularity of our game. Every time we take our game to a new market, Brazil's a great example of it, the fans go crazy for it. They sold out the tickets in less than 90 minutes. People had a wonderful time. It was the talk of the town. And I think it will be the basis and the sort of the match that lights the excitement and the popularity of the game in that market, as well as what we're doing around the world. So we're very excited by it. It's just one element of that strategy. You need to have television, you need to have activity and participation in the sport, and flag football is a big part of that. So all of those factors, I think, are going to be what we think will be a very successful formula to be a global sport.
Or do you ever envision having a team that's based overseas in Mexico City or in London?
Listen, we've talked an awful lot about it, and I think there are markets that could, without question, support an NFL franchise.
Welcome back to the circuit. This time, we're taking you to the frontier.
Where is do we have a camera, or do we don't want to lose you, Emily, in all of this?
Stargate, put that name down in your books.
What we're undergoing right now is sort of the largest infrastructure build in human history.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
When did you realize, oh my gosh, my life is never going to be the same?
The day I got engaged, I was like, whoa, what have I bitten off here?
Where the future gets real.
How confident are you that AI's promise will outweigh the perils?
I'm not confident.
So the tech companies are lying or fudging.
And a little weird.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang. Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
Good Monday morning. Futures are down with 30 minutes to go until the start of the cash trade. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, a rush for trade deals. The Trump administration signals August 1st is the start date for higher tariffs if you don't agree to a better deal by Wednesday. Meanwhile, the feud between President Trump and Elon Musk escalates as the Tesla CEO moves to form a new political party that could even back another presidential candidate. And Wall Street reacts. William Blair downgrades Tesla, saying investors are growing tired of the distraction. Analyst Jed Dorsheimer joins Open Interest this hour.
Let's take a look at the reaction in the market right now, because the stock slumping as Elon Musk dives back into politics. You also had Wedbush analyst Dan Ives calling Musk's move exactly the opposite of what investors want. And you take a look at the shares, down 6.4% pre-market. This stock was already down about 22% year to date heading into Thursday's close.
We'll see if more analysts downgrade the stock, because even if it's exactly the opposite, I don't think Dan Ives has Tesla as a sell right now. CoreWeave is off after confirming an all-stock transaction to buy Core Scientific for $9 billion. And obviously, if it's an all-stock deal, you're going to see a red arrow on the acquirer. It is, however, interesting and questionable why you see Core Scientific down 17% on this deal. Katie?
To that soon, but let's turn back to this morning's top story, and that is that countries around the world are working to reach trade deals with the U.S. ahead of this Wednesday's tariff deadline. President Trump sounding optimistic on negotiations that continued over the holiday weekend.
I think we'll have most countries done by July 9th, yeah. Either a letter or a deal.
But they go into effect on August 1st. Tariffs go into effect August 1st, but the president is setting the rates and the deals right now.
For more on the tariffs and the talks, we're joined by Bloomberg senior economics writer Sean Donnan in Washington, D.C. So they're kind of rearranging the goalposts here, Sean, but I guess the message is the same. If you don't have an agreement with the president, who's just won a huge victory with the big, beautiful bill and has stock markets at an all-time high, he's going to put some big tariffs on you August 1st.
Look, it's another Monday morning in America, and lots more questions about where trade policy is heading, right? We have had this indication from the president that by noon today, there will be letters going out. There may be some deals announced. That seems like it will give us some clarity, at least. But we should remember that we've been here before. For weeks now, the administration has been saying that deals are imminent, that they will be announcing them in the next week or two. And we've been waiting and seeing. We've really only seen one kind of firm deal with the UK, a ceasefire with China, and a deal that was announced on social media by the president with Vietnam that the Vietnamese followed up by saying they still have some talking to do. So, you know, lots of questions. The next few days are going to be interesting.
Absolutely. I'm sure they'll be keeping us all busy. That is Bloomberg's Sean Donnan with the latest. And tariffs, not the only trending topic in Washington this Monday morning. Tesla CEO Elon Musk tweeting over the weekend that he will be starting a third political party, the America Party. President Trump reacting to the news yesterday.
It's always been a two-party system, and I think starting a third party just adds to confusion. It really seems to have been developed for two parties. Third parties have never worked. So he can have fun with it, but I think it's ridiculous.
We head to the White House for more now with Bloomberg Washington correspondent Tyler Kendall. Tyler, you can see Tesla shares down mightily. Let's just talk about the America Party. We'll note, of course, that no paperwork has been filed with the FEC. But what do we know about what Musk is trying to accomplish here?
Right, exactly, Katie. This really is just the latest sort of twist intensifying what has been a mounting feud between, of course, the two former allies. Now, you said it there, we kind of sparse on details. He hasn't formally filed the paperwork that would be required to do so, but it has been interesting to see how Musk has sort of painted some of his goals as being going after some key House and Senate seats as sort of the directive, the mission here, considering that Congress has such slim margins. He feels that that could really help affect legislation legislation going forward. And I can tell you that we pulled the stats. There are 33 seats up for re-election in 2026 when it comes to the Senate. 13 of those are Democrats, 20 are Republicans. So Republicans are going to be much more on the defense going into the 2026 midterm cycle. And perhaps that could be part of why we see this White House really come out and criticize Elon Musk over the decision. President Trump there, you heard him saying that Elon Musk has gone off the rails. So we're still waiting, of course, for some additional details going forward. But it was interesting, Katie and Matt, to see when Elon Musk did announce this, because he did tie it directly to legislation. Of course, he has been blasting the One Big Beautiful Bill, and his announcement was one day after President Trump signed that reconciliation package into law.
All right, Tyler, thanks very much. Bloomberg's Tyler Kendall there talking about the deepening rift between Elon Musk and President Trump. Tesla shares, meanwhile, are plunging pre-market as Musk continues to focus on politics and not necessarily his EV company. Wedbush analyst Dan Ives joined Bloomberg earlier, voicing his concern.
I believe you've now hit a point. I think the board's going to have to get involved because this is now over. I think there's a line in the sand that he's now starting to cross, and that's the frustration. As someone that's a huge supporter of Tesla, autonomous, the golden age ahead, you cannot kind of go down this path.
For more on the stock reaction, we're joined by Bloomberg Tech co-host Carolyn Hyde, and it would be remiss if we didn't at least comment on his shirt and jacket. I know it's a waste of time, but like you can't go from that clip.
You're not numb to it yet?
I love it.
Either of those pieces in isolation would probably be okay, but together,
I love it.
We talk about your fashion just as much, don't you, worry?
Thank you. All right, let's get back to Tesla, because Elon Musk promised us, right, Michelle Hussein, in a face-to-face interview or screen-to-face interview that he was done with political spending.
And yet, we see the market sell off because this is exactly the opposite of what the Tesla investor wants right now. We've got William Blair analysts going as far as to actually downgrade the stock on the back of this, because this comes in a whole wall of worry when it comes to Tesla. Yes, you're worried about the distraction, worried about the focus now on politics rather than robo-taxi rollout. But at the same time, China, we're seeing competition just ramp up ever further there. You've got the headwinds of the fact that the sales picture is ugly, particularly in Europe. And just remind ourselves, last week it was a 13% collapse in their quarterly sales. And so all of this just adds to the fact that they wanted refocus from the CEO. And instead, you're getting someone who's getting ever more involved in politics. There is, though, one particular analyst who's been calling out that maybe this is a good thing. He's based over in Hong Kong, and his name is Jason Su. He's from Rayliant Global Advisors. He thinks this is a great idea and ultimately thinks this is the only way that if you've already managed to completely blow it up with the current administration, lose all of your favor with President Trump, maybe you do need to start picking out certain areas of political strength that the president currently has and fight back that way. But he's one voice. Everyone else is saying this is a disaster, you shouldn't be doing it, and the board should get involved. James Fishback as well, who is going to be setting up a new ETF all about Elon Musk, has pulled that deal and is saying he's already written to Robin, who of course is the head of the board.
There you go. I want to go back to that Rayliant call, though. Swimming against the tide, as you highlight, but it does play into the idea that it's not just a distracted CEO that Tesla is facing. It's all of this policy risk, too, emanating from the big, beautiful bill. I would assume, though, it's sort of a long-term, really long-term call that eventually maybe the America Party will be able to get more friendly politicians in these seats.
And in the here and now, you have William Blair analysts saying, look, this is why we're downgrading our stock view. It's because just look at what the big, beautiful bill means. Yes, you take away the consumer tax credit of $7,500, but it's not just there that's the issue. It's the regulatory credits, the money that they would make because other car companies would be fined if they didn't live up to certain climate targets.
Oh, you're just talking about the car business. Fine. I didn't know you were just talking about the car business. That's such a tiny part of what Tesla really is, right?
Humanoid
the company is worth, again, more than $1 trillion. So even if it's plunging today, it still has climbed back up from the depths of last week.
And that's actually what's really notable. It hasn't sold off as hard as it did with the first big fallout with President Trump at the beginning of June. So actually, we've got more depths to plumb. Most analysts out there are now saying that the price target by the end of 12 months is going to be lower than it is currently today. And we've got about, what, 13 overall sell ratings on the stock?
13 out of 61, yeah.
But, I mean, to the point, we had our editor-in-chief emeritus telling us all about how ultimately, remind ourselves, Tesla is still worth more than all the other car companies combined.
But
the future is AI.
Intimately aware of that.
But the future is AI, it's Optimus, and it's humanoid robots.
Right.
How are you going to get there if the regulatory landscape suddenly shifts away from you? He wants the support from the administration, not blowing it up. But at the moment, if you're an investor, you're having to bite pretty hard.
I will say, maybe the business, the EV business, it's not a small part of the business, it's a small part of the market cap, though.
It's a small part of the stock story, right? Because, to your point, every single car maker in the entire world, including, Ferrari, is worth far less added together than the market cap of Tesla. So this stock story is about humanoid robots. It's about somehow taxis. I don't get that.
And
but
it's about betting on Elon. It's about betting on Elon. Are you going to bet that he can win the political story as well as the business and entrepreneurial story? That's the key question.
All right, we look forward to the coverage on your program. Caroline Hyde co-hosts Bloomberg Tech. That kicks off at 11 a.m., one you don't want to miss. Coming up, William Blair downgrades Tesla. We'll speak to the analyst, Jed Dorsheimer, the group's head of the energy and power technology sector next. This is Open Interest.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO?
It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function, it's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is
telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good, but as we strive for the great ones, sometimes those really, really good ones have to be left behind.
Chief Future Officer, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
At least 82 people have been killed and dozens are missing, including 27 girls who attended Mystic Summer Camp after catastrophic flooding in Kerrville, Texas, left officials struggling to explain whether they did enough to warn people of the waters or if they rose simply too quickly. The area remains at risk of further inundation as thunderstorms move through west central Texas, and we'll keep you apprised of this story throughout the program. Apple is appealing a $580 million fine from the EU, calling it unprecedented. The European Commission said that the fine was due to Apple's anti-steering policies, and the amount of the fine was determined by the gravity and duration of Apple's non-compliance. You can see the shares moving slightly lower in the pre-market. And William Blair has downgraded Tesla shares to a market perform, thanks to headwinds stemming from President Trump's big, beautiful bill and the fallout from Elon Musk's politics bid. Analyst Jed Dorsheimer writes, quote, investors are growing tired of the distraction at a point when the business needs Musk's attention the most. Katie?
Joining us now, I'm pleased to say we have the analyst behind that call, Jed Dorsheimer. He is William Blair Group, head of energy and power technologies. Great to have you with us, Jed. As I see it, there's two big headwinds here. You have a distracted CEO, and then you have very real policy concerns when it comes to the big, beautiful bill. You write recently that the big, beautiful bill might be too much for Tesla shares. Tell us why.
Thanks, Katie. By the way, first off, you're catching me at the end of vacation, so I feel inferior looking at Dan Ives' jacket.
You look
I'll
great.
have to upgrade my wardrobe. So, listen, I think you've got two things going on. As you guys said in the previous segment, there's not a lot of focus on the core auto side of the business, even though it is the vast majority. And I think we have previously talked about the focus on robotaxi and humanoid robots and see these longer term opportunities. What has changed, though, is while the $7,500 tax credit was well known, telegraphed, probably in the market already, the regulatory CAFE fine reduction was not. And that is about $2.8 billion of profits for Tesla. So what investors are going to have to do is they're going to have to hold their nose and stomach more margin hits and a reset of street models, in our opinion, lower to accommodate sort of getting to that promised land of these newer opportunities like robotaxi or humanoid robots, et cetera. And we think that that's just too difficult with a 1-2 punch between the $7,500 tax credit and the CAFE or the basically taking those EV credits to zero.
Jed, let me first say that I, too, am a big fan of Tommy Bahama. And secondly, ask how much of this, trillion-dollar company is the car business? I mean, do you look at it that way? Because as we talk about all the time, the valuation is just insane for a car maker or almost any other company on the planet. So how much of the car business matters?
Yeah, so let me frame it in terms of shares, just so that viewers might be able to get a better handle. I think, if you took a look at a, back of the envelope, sort of sum of the parts, using a 10 times EV to sales on just the auto business gets you about $40 to $50 per share. On the energy business, probably another $30 per share. And so that means the remaining value would be on these other robotaxi, robots, potential for value in terms of Dojo, et cetera. All of that non-auto side. So, I think let me maybe jump to what the next logical question would be. So if the auto business goes from a 50 to a 40, not a big move in terms of the shares, but it's going to test the patience, in our opinion, of investors, because you won't see robotaxi really scale and kick in by our estimates until 28.
Yeah, and you can see that patience being tested this morning with shares down 6.7% pre-market. I don't actually think we've talked about Dan Ives' wardrobe enough, so let's actually take a listen to what he had to say on Bloomberg TV earlier this morning.
I believe you've now hit a point. I think the board's going to have to get involved because this is now over. I think there's a line in the sand that he's now starting to cross, and that's the frustration. As someone that's a huge supporter of Tesla, autonomous, the golden age ahead, you cannot kind of go down this path.
I thought that was interesting, Jed, to bring the board into this. Do you share that opinion?
I don't. And the reason being is, Elon has supermajority voting rights of Tesla. Your shares, it's not like we're talking about the shares being $100 per share. I mean, it's $294 per share. So, despite, what seems like a lot of pressure recently in terms of off of the high, you're still it's 3 times where your low has been. So, I just don't see, the board coming. And it's also, with Elon, it's a little bit of a double-edged sword where, I would argue what people are paying for is his ability to innovate. Elon Musk is one of the great innovators of our modern day. So taking him out, does the board really, would they really want that? And I think, when you kind of ask that difficult question, I just don't see them stepping in at this stage. But I'm not privy to that right now. But I would not share that opinion.
What do you think are the problems here with a sell rating? Only 13 analysts of 61 have had the, I guess, courage to go there, because shorting this stock has been a fool's errand, right? I mean, ask Jim Chanos, and he'll just tell you about the times he's been burned, and he's not willing to do it again.
I mean, I've been around this stock for, about 15 years. And yeah, you're right. I mean, it is, I wish I had $1 for everybody that would tell me that it was a great short. And it has not worked out that way. That being said, we need to focus on the fundamentals. And I think the fundamentals associated with this bill definitely take some of the luster off this right now. And for our clients, we'd rather wait for a better opportunity to get more bullish, or to see, I think we're kind of in an in-between where the signals aren't as great right now, but, there wasn't enough for us to defend it either.
Well, when it comes to the fundamentals, policy headwinds aside, what does the demand picture look like when you think about the American appetite for EVs right now?
Well, it's going to get worse. I mean, you actually, near term, it's going to get better, because your expiration of the $7,500 is going to expire at the end of Q3. So we actually suspect that there will be a boost in the very near term in terms of demand. However, as that rolls off, the vehicles are either going to get more expensive, or the margins are going to get worse. So, as we look out, say, 2 years, 3 years, really until you get robotaxi that comes on and the data points to suggest the scaling of that, it's going to be, it's going to be noisy in terms of the signals versus noise.
Jed, smart analysis. Really appreciate you joining us from your vacation. When you come back, we hope to get you here in studio. Jed Dorsheimer there of William Blair, which has now initiated a sell rating on Tesla. Coming up next hour, we discuss Elon Musk's third-party pitch with political historian Wendy Schiller of Brown University. Have third parties been successful? Even if they haven't taken power, do they manage to sway the vote? We'll talk about that with Wendy. This is Open Interest.
Flood of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince. Concerned that not enough guardrails may be set up just yet.
Headline after headline. Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back to Open Interest. Here's your setup on this Monday morning. Red on the screen, the S&P 500 down about 0.4%. Big tech even more. I would say 0.4% on the S&P 500 might look resilient when you consider the fact that Tesla shares are down more than 7% pre-market. But it's the small guys that are getting beat up the most, with the Russell 2000 down about 0.7% to start the week. Matt Miller.
That's tough for the small caps.
Yeah.
I guess we had rates come back up at the end of last week. Right now we're looking at a little bit of a gain, 436, 437 on the 10-year. We have, though, really, I think, after the passage of the big, beautiful bill, a signal that Republicans are going to do whatever Donald Trump wants them to do. And he's free now to put even higher tariffs on our trading partners.
You know who is not doing whatever Donald Trump wants is Elon Musk. That ties into Tesla, which we're going to talk about even more. We're going to get into CoreWeave as well and Core Scientific. A lot more coming up, including the opening bell. And coming up next, we'll walk you through the action with Lori Calvasina of RBC next. This is Bloomberg.
A cidade estava sitiada.
Nisso, ao começo, eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We are looking at futures that are lower this morning. S&P futures off about 1/3 of 1% from an all-time high, of course. NASDAQ futures down a little bit more, 0.5%. So tech stocks losing more. That could be explained by the drop that we see in Tesla today. And then the small caps off by 0.7%. You hear the bell at the New York Stock Exchange. It's being rung by Carly Kloss, who is apparently a supermodel that started this organization, Code with Klossy, for girls or gender expansive youth 10 years ago. It's going to be about as important a skill as weaving pretty soon, now that AI is out, right? Wayton Financial Limited ringing about the New York Stock Exchange. And those shares are actually up 40% from their IPO, which I believe was in April at $4 a piece. But the most important takeaway from this is that their ticker is WTF. Why the face?
Why the face? That's exactly what that stands for. Let's talk about Tesla shares right now. Really slumping. That's after Elon Musk is diving back into politics with the new formation of a new U.S. political party. William Blair downgraded the stock to market perform in the wake of the news and the passage of the Trump tax bill. You add it all together, Tesla shares down about 6.6% at the opening bell. Its year-to-date losses, Matt Miller, now pretty close to 30% on the year.
Right. Still worth over $1 trillion in market cap. Well, actually, you know what? Why don't I check the actual...
There you go.
Nope. 941 billion only. So once again, Tesla falls out of the 4 comma club. CoreWeave is buying data center operator Core Scientific. It's a deal that we've been following for at least a year. Right? The Wall Street Journal reported at the end of June that they were interested in Core Scientific. They attempted to buy Core Scientific for $1 billion.
$1 billion.
How many years ago was that?
That was sometime in 2024, I believe.
Oh, so 1 year ago.
Yeah.
And now
$9
billion. I guess that's a lesson if you're a seller.
Just wait it out.
Wait. And for some reason, Core Scientific shares are down.
Yeah, we're going to get into that.
That doesn't make much sense at all. So we will continue to follow that story for you. Last quarter, dozens of companies halted guidance due to macroeconomic uncertainty. Now Goldman Sachs expects companies to restart guidance as tariff levels come into focus. Here's head of asset allocation research, Christian Müller-Glissmann.
In that earnings season starting July 15th, we will get companies potentially reporting first impacts, but more importantly, give guidance. And we'll learn if this is a relative value story, where there's a few specific companies impacted, or if it's an S&P, if it's a beta story. And I think that's what we need to understand, because if you look at the implied correlation, like how the market prices volatility in the earnings season, is it micro or macro? The implied correlation that's priced is very low. So the market actually thinks it's going to be a micro story that's very specific companies, but it's not going to be a big macro factor.
Let's bring in RBC Capital Markets head of U.S. equity strategy, Lori Calvasina. Lori, what do you think about what we're going to see from Donald Trump? They've now sort of pushed the what do you call the forks? The field goal, the field goal, the goalposts back to August 1st. But it does look like Trump is free to do a little bit more of what he wants, since he's done so well with the big, beautiful bill and the stock market.
Yeah, look, as I've talked to investors, kind of late June, the first couple days of July, I don't want to say complacency, because that's not the right word, but I think investors had really in their minds kind of moved on beyond tariffs. And so I was hearing things like, I had one investor say to me, tariffs are deflationary. That was not the sort of base case, but I heard a number of people say, look, tariffs aren't showing up in the inflation data. Their companies are not passing this on. They're figuring it out. And, my colleagues and I at RBC, we've all along thought that the impacts of tariffs were going to be felt a little bit later on. And, there's sort of a really interesting inventory debate out there. How much pre-tariff inventory are companies sitting on? When are they going to run through that? I really hope, I read earnings call transcripts. I unfortunately can't get on the earnings calls, but I do hope the analyst community will really push companies on that because that was a big talking point. And, it may be giving some investors a false sense of security. Maybe they do have, inventory that can just last forever and, get them through it. I kind of doubt it.
Well, what if they have very fat margins, Lori?
Well, I mean, have you ever known investors to like margins going from being great to a little less great? That's not been my experience on 25 years on Wall Street. And, the point is somebody's going to have to pay the tariffs. Is it going to be the companies absorbing it through margins and then, earnings are not as hot as they could have been? Or are you going to see it show up in inflation, potentially reverberate in consumer spending? Investors, I think, have really just kind of talked themselves into the idea that there aren't going to be any potholes or ramifications from these tariffs. And one thing we also hear is that investors are really getting bulled up on 2026, and a lot of that has been from the tax bill and the bonus depreciation and CapEx. But, if there are some inflationary impacts that get pushed into next year, if there is some pull forward of demand that either pulls forward from the second half of this year or next year, I don't think investors are thinking about those kinds of things either, to be honest.
Well, the thing is, I mean, when it comes to inflation, we were talking to Stephen Myron last week. He made the same point that you really haven't seen sort of the inflationary impacts that were warned about from tariffs show up in the official data. You also haven't really seen it in the labor market. I mean, we had obviously the rate of change is coming down, but still a very strong showing when it comes to the June payrolls report. So, I mean, in some senses, you could see how some of these investors are looking at the data. They're looking at what corporate America is saying and putting it all together and saying, this looks pretty bullish right now.
Yeah, what we saw in the last reporting season is companies finally, after months of not really saying anything or even acknowledging the possibility of broad-based tariffs, finally started to talk about it. But we also saw a number of companies saying, look, this was far beyond our expectations. So I think there was a little bit of shock and there was a little bit of, kind of get your messaging together. So we had a lot of conversations about mitigation, inventories, pricing, those sorts of things, but there weren't a ton of specifics. And as you guys mentioned at the top of the segment, right, a lot of companies did pull guidance. We need to get some more specifics in terms of how companies are thinking about this stuff. And frankly, they've had 3 months to do it. So I do think they owe Wall Street a little bit more specificity.
Do you think that we're going to see the U.S. continue to rally like this? Because we've seen Europe do so much better, and now it seems like some of the shackles of uncertainty are lifted, right? So,
we're going to have to hear from the companies. Has it been enough of a lifting of uncertainty to let them proceed with things like CapEx? I have noticed that cost containment has crept up in the corporate earnings transcripts in recent months. So we'll see, frankly, where their heads are at. But if we think about sort of U.S. versus Europe, we had this moment, I think it was kind of back in March, where you really did see this kind of push in the money flows out of the U.S. and into Europe. Now, that had come off of very peakish inflows into the U.S. back last fall. So I think regardless of what the news flow had been, you were going to get some reversion. But the other thing that we saw when people were really kind of moving out of the U.S. and into Europe was European GDP forecasts were moving up. Economic surprises were turning positive. There was real excitement over Germany and what was going on in that economy in particular. So it wasn't just anti-U.S., it was genuine excitement over Europe. And as I talk to global investors, it feels like that latter part of the story has faded. And now I'm starting to hear a lot about, well, the U.S. still has the best productivity story in the world through AI, and we have to counterbalance that with some of these things we've been, sort of concerned about in the past. So it feels like a much more kind of balanced, nuanced look at the U.S. right now.
Yeah, absolutely. And I will say it is remarkable at this point in the year to see that outperformance be sustained, because it was a much different narrative when you think back to January, February, March. I do want to get your opinion on what's going on with small caps, because as measured by the Russell 2000, we haven't seen an all-time high for that index since 2021. It feels like we can't quite get the story straight. How are you viewing the little guys?
We have a chart that we watch in our weekly every week, and I will confess, I put the weekly out a couple days early so I could take Thursday off.
There you go.
And so my chart is as of Wednesday. But basically what we've seen in small relative to large is really more of a stabilization of performance. And you have a good day every now and then people get really excited and say, small caps finally breaking out. Well, a couple things you need for small caps to break out is, one, you need real economic excitement. Maybe some of that's coming back from tax. We'll have to see. But generally, you want GDP above kind of 2.5%, like 1 to 1.5%, 2% isn't going to cut it. The other thing you want to see are things like some of these sentiment indicators like ISM move up. We haven't seen that yet either. So you can watch for some of those short-term indicators. But honestly, the thing I'm wondering about this morning You know, what I'm hearing is that after the NFP print, we've started to see rate cut expectations dialed down.
Yeah.
And that is really a big trigger, I would say, the last couple years for getting the fast money crowd to make these short-term small cap bets. And so the last couple weeks when I've been hearing these murmurings about, like, you know, small caps, is it finally time to get in? We've had a bunch of strategists around the street try to make these bullish calls. It's been in the backdrop of seeing those cut expectations getting dialed up. And now that we're dialing them down, even if it is because the economy is good, that takes away a catalyst from the fast money crowd.
It's a great reminder. You think about an area of the market that really needs rate cuts. It's the small caps. Lori?
And look, I would say the broader market too. We've seen in recent years when those rate cut expectations are getting dialed up, the S&P gets goosed as well. It's not just the small caps.
Absolutely. Lori, great to see you. Great to kick off this week with you. That is Lori Calvasina of RBC. Let's get a check on what this market is doing. We're about 10 minutes out from the opening bell, and you can see we're about 0.4% lower when it comes to the S&P 500. We've had 2 straight weeks of gains, so maybe a little bit of that momentum coming out of the market. You look at what is doing well. Up top is Uber actually getting a price target upgrade from Wells Fargo, helping out shares, General Electric, AbbVie as well. The downside is more interesting this morning, in my opinion, because right at the top, as you expected, you have Tesla down almost 8% when it comes to percent-wise, taking 8 points off the index, definitely the biggest weight right now. But then you also have NVIDIA down a little bit. That certainly isn't helping Eli Lilly and Oracle as well. This is the individual picture. Let's take a look at the sector look as well, because you do have more red than green. You do have some bright spots in the market, as we just highlighted. Industrials, maybe. Utilities, maybe. But look at these moves. They're tiny. It's more interesting on the downside. As I said, you can see communication services, materials, and then consumer discretionary shaving 1.3% off the index right now, Matt.
Yeah, right. Interesting trade today. It looks pretty bearish, although it's important to remember that we came from all-time highs and just continued to make new highs almost day after day last week. Coming up, Tesla shares are slamming on the brakes, and the company is now worth less than $1 trillion as Elon Musk makes another play into the world of politics, which he had promised not to do. This is Open Interest.
As Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me. Now we're playing.
Yep, now we're playing. First and foremost, I am a capitalist. The capitalist system is the best system in the world. There isn't another one that works as well.
Citigroup moves $4 trillion a day.
5.
Wall Street used to be a place.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Now it's more of an idea.
The optimism here is infectious.
You think our New Yorkers are negative?
Yes.
Anything that trains people to understand probabilities and just think through things with a greater degree of nuance is a service to humanity.
I hope you survived the day.
I did. It was a busy day.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachi in Tehran, and this is Bloomberg.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month only on Bloomberg.